Hi guys, welcome back to Finpact. Today we're going to take a look at how there have been so many new developments with crypto regulations. And before we jump into this video, guys, this video is sponsored by one of my favorite exchanges to use, and that is Bit4X. And right now they are giving away $10 worth of BTC coupons for new users. If you download their mobile app on the App Store or on Google Play and you register a new account in the app using this referral code, which I will link down below in the description box, and follow them, then you can get a $10 BTC coupon. This is for perpetual trading and it is free. Also, Bit4X has so many new projects launching on their platform that can give you huge returns. Some of their projects have done more than a 10x on their first day of launch. So you can stay tuned by looking at their Turbo Starter. Now, currently, the Crypto Fear and Greed Index is at extreme fear at 23. This is a bit of an improvement to what we saw last month. And if we take a look, Bitcoin is still hovering around the $19,000 mark. It's struggling to get back to $20,000. This is because the current macroeconomic climate is not great. Inflation that has impacted not only the stock market, but has also massively impacted the cryptocurrency markets. We are in a bear market. But again, if you believe in the fundamentals of crypto, then you would not be afraid. In fact, you would see this as an opportunity to buy the dip. But a lot of people are saying, what do you mean buy the dip? The prices are still going down. I'm really scared. Now, yes, prices may go down, but the downswings that we are seeing are not going to be as high as what we saw during the bull run. So when we saw the bull run and all-time high prices, the crashes were huge. They were like 95% crashes for some cryptocurrencies. Some were less. But right now, because we are in a bear market, that is why I am personally accumulating. Again, not financial advice, but that's only because I believe in crypto and blockchain and Web3 and NFTs for the long term. And I do believe that we will go back into a bull run, whether it's in 1, 2, or 3 years. I'm buying right now for the next bull run when we see new all-time high prices. We've not seen prices this low. And given that it's a bear market, we are still higher than the Bitcoin price we saw before the 2020 bull run started. Bitcoin was around $10,000 to $15,000. We're still higher than that, which means our base value for Bitcoin and the rest of the altcoins, well, not all the altcoins, but the major cryptocurrencies, is still higher than what we had pre the bull run in 2020. This has been because of mass adoption, institutions getting involved. The cryptocurrency industry is so big. I've seen that not just online, but I've been going to conferences all across the past year in Serbia, in Dubai. I'm going to be at Token 2049 this year as well. So I'll get some interviews for you guys up on this channel. But I've seen that there has been major adoption. Cryptocurrency projects are still developing and improving their protocols and their blockchain methodologies. So it is still good news. Fundamentals have improved. And you know what? One of the things I really believe is that we needed crypto regulation for cryptos to be mass adopted. If we have the right regulation and that this space is no longer a gray area and we have good rules in place, then we can progress with mass adoption, and then we can progress with the bull run again and new all-time high prices for investors. So as you can see, the EU Financial Services Chief calls on the US to create new crypto rules. Mairead McGuinness said any regulation imposed on the industry would need to be global in order to work, which is true because the whole ethos behind cryptocurrencies and blockchain is that it enables fast transaction speeds globally. You're not just applying this to one country. Blockchain has been about the transfer of data, cryptocurrencies, NFTs in a global manner where you can have blockchains communicating between users from the UK or the US or India or China or anywhere. That's the whole ethos behind cryptocurrencies. So I do believe that Mairead McGuinness is right in what she's saying. And here's the other thing. This is why this bull run is different. This is why the base price is different. As I mentioned earlier, institutions are involved. And institutions are expanding their crypto, blockchain, Web3 exposure. In fact, I know a friend who works at one of the major banks, and she was in the finance division of that bank, and now she's moved to the blockchain division of that major bank. Of course, I'm not going to go into any names of who this is, but that's an example that people even in the corporate world are transitioning towards blockchain technology and, well, the entire DeFi space. So this article on Cointelegraph has said that D'Agostino also said the recent battles between the SEC and the CFTC are a good thing for crypto because it indicates that it will be a vitally important piece of market structure moving forward. John D'Agostino is a Coinbase senior advisor, and he also said, so for me, for someone who spent 15 years trying to get commodities to be mainstream, it's actually moving fast. But I do understand why somebody in the heat of the moment feels it's glacial. But for institutions, I think it's moving very, very fast. And that example of my friend that's moved to a blockchain role within a major bank is an example of this. We're also seeing increasing regulatory adherence by cryptocurrency exchanges. They're really establishing stricter rules and punishments. For example, Coinbase threatens to sue crypto traders who profited from pricing glitch. So 1,000 users in the Republic of Georgia made wild profits on a Coinbase pricing glitch. And now this US-based crypto exchange does want to actually get their money back. My point is that they're holding users, crypto companies more and more accountable. I mean, take the whole fiasco with Do Kwon. Regulators have been after him. And if you want an update on that, I will make another video. Here's another example of mass adoption. MasterCard will help banks offer cryptocurrency trading. MasterCard is a major financial institution that offers payment services. So incorporating cryptocurrency, well, especially cryptocurrency trading, is a big thing. So this payments giant is acting as a bridge between Paxos, which is a crypto trading platform already used by PayPal and banks. So MasterCard's program will handle the regulatory compliance and security, and therefore their clients will be able to incorporate cryptocurrency trading. Here is an example of a major financial institution, banking giant JP Morgan, and they have appointed former Celsius executive as crypto regulatory policy head. They're facilitating the adoption of crypto. Of course, these banks need to be compliant, and that's why they are hiring within this sector. And they have appointed Aaron Levine, and he used to work for Celsius. He spent 8 months as head of policy and regulatory affairs for Celsius, which we know is crypto lender that did file for bankruptcy. So he would have seen all the regulatory hurdles that took place during that time. Another example is crypto lender Voyager that settled with executives who approved a risky loan. So this risky loan was around $1 billion, and this was to failed crypto hedge fund 3 Arrows Capital. I don't know if you guys know about the whole story, but if you want, I can make a video on it. But basically they had minimal due diligence, so they didn't really do the adequate research that they were supposed to. And of course, this $1 billion loss contributed to Voyager's own bankruptcy. So anyway, guys, that's an update on what we've been seeing with crypto regulations. Let's stay tuned and see what more gets proposed. I will make an update video on it. If you like this sort of video, because it isn't about a specific cryptocurrency, let me know, because I do believe that markets and what's happening in the broader crypto market is very important, as that sort of sets the rallies for the rest of the cryptocurrencies. What happens in the market gives either confidence or lack of confidence in the cryptocurrency prices. So yeah, also remember, this is not financial advice. Make sure you do your own research before you invest in anything. This is purely for entertainment purposes. I am an affiliate for Bit4X. They have sponsored this video. Details of the sponsorship are down below in the description box. And check out their perpetual trading where you can win the $10 BTC coupon. I've linked all of that down below in the description box. Anyway, guys, thank you for watching, and I will see you in the next video. Bye!